Philippine president expects to receive a windfall of investment pledges from his Trilateral summit with the U.S. and Japan.
The US and Japan just announced they're about to drop $100 billion into the Philippines. Yeah, that's billion with a B enough money to buy every jeepney in Metro Manila, gold plate them, and still have spare change to rebuild the Malampaya gas field twice over. But this isn't some random act of generosity. No, this is a geopolitical power move. The kind that makes Beijing clutch its South China Sea map a little tighter. America and Japan aren't just investing, they're staking a claim. The Philippines isn't just a country anymore. It's the new front line of opportunity and influence in the Indo-Pacific. We're talking about $100 billion pouring into energy, semiconductors, infrastructure, and digital tech. Think of it like an economic Avengers team up. Captain America bringing democracy, Japan showing up with bullet trains, and the Philippines finally getting its own superhero moment in the Asian economy. Now, this isn't just pocket change for roads and railways. These projects will literally redraw the country's skyline and rewire its economy. From Luzon to Mindanao, it's about building, digitizing, and powering up. Because you can't be an investment hub running on 1990s infrastructure and 2020s ambitions. But hold up, before we start celebrating, let's talk about who's actually writing the checks. Because when Japan opens its wallet, you know it's not just for sushi and souvenirs. Japan has quietly been the Philippines' most reliable best friend for years. Forget sentimental alliances. This is about infrastructure domination. Tokyo's fingerprints are all over the country's biggest transport projects: the Metro Manila subway, the North-South commuter railway. All designed, financed, and executed with that signature Japanese precision. One project alone costs over $25 billion, and Japan's footing more than 80% of that bill. Let that sink in. They're not just helping the Philippines build railways. They're laying down influence tracks straight into Southeast Asia's future. Japan knows the rule. If you build the roads, you control where the traffic goes. And while Japan's down there pouring concrete, guess who's flying in with silicon chips and atomic blueprints? Yep, Uncle Sam. And this time, he's not just bringing speeches about freedom and shared values. He's bringing tech, energy, and nuclear reactors. Seattle-based ultra-safe nuclear corporation is now in talks to build modular nuclear power plants in the Philippines. Small, efficient, and just dangerous enough to make China slightly uncomfortable. Meanwhile, US investors are eyeing the country's semiconductor and ITBPO sectors, both of which are growing faster than a Manila traffic jam at rush hour. The semiconductor sector alone contributed over 10% to the economy last year. And the US sees that as an opening, a golden chance to move production away from China and closer to a friendlier coast. But that's not all. There's a big play brewing in the West Philippine Sea. Joint oil and gas exploration is on the table. Imagine Filipino and American engineers drilling side by side while Chinese patrol ships squint suspiciously from a distance. It's not just about oil. It's about asserting presence, planting the flag, and saying, yeah, this sea is ours. Here's why that matters. Because time is literally running out for the Philippines' energy supply. The Malampaya gas field, the country's only major source of natural gas, is expected to run dry by 2027. That field currently powers about 40% of Metro Manila's electricity. When it runs out, it's not just lights off. It's jobs, production, and growth taking a nosedive. So when you look at this US-Japan $100 billion mega deal, it's not charity, it's strategy. They're stepping in right as the Philippines faces an energy cliff, and they're offering not just investment, but insurance. But where there's a cliff, there's always someone building a bridge. And this bridge, it stretches all the way across the Pacific, connecting military strategy, economic ambition, and a shared interest in keeping China's shadow from growing any bigger. And that's where it gets really interesting. Because this investment isn't just about pipelines and power plants. It's about positioning, and whoever controls the Philippines' next decade of development might just control the next century of trade routes. Everyone's calling this the golden age of Philippine investment. But let's be honest, it's also the most strategic money ever spent. Because this isn't just about boosting GDP, it's about securing geopolitical real estate. The Philippines has become the hottest piece of property in the Indo-Pacific. And everyone wants a lease. The US wants access to bases, Japan wants trade routes secured, and the Philippines, well, it wants to finally stop being treated like the side character in Asia's story. Let's talk about what this money actually means. Japan's investments aren't just about shiny trains and tunnels. They're a statement. Tokyo knows infrastructure builds loyalty. You don't just construct railways, you build relationships that last for decades. The Metro Manila subway alone is being financed mostly by Japan. And that project, it's not just underground, it's under Tokyo's influence. The US is betting big on the tech and energy sectors, semiconductors, ITBPO, nuclear power, basically everything that fuels modern economies. Washington's message is clear. We're not just allies. We're partners in production. See, America's been on a global mission to friendshore its supply chains, moving factories away from China and toward nations it trusts. And right now, the Philippines is looking like the new VIP lounge for that strategy. But don't let the buzzwords fool you. This partnership isn't just built on spreadsheets. It's built on strategy. Here's the play. Japan and the US want to secure the Philippines as a stable production hub in the middle of an increasingly unstable region. Every port, every data center, every power plant. It's not just infrastructure, it's influence. And this plays perfectly into the Indo-Pacific economic framework, Washington's counter to China's massive trade network. The Philippines hosting that summit this year isn't random timing. It's symbolic. Manila's becoming the meeting room of the Indo-Pacific, where economic alliances are drawn and old power lines are redrawn. But wait, while the money flows in, another current is shifting beneath the surface. And it's carrying the name China. Beijing might not say it out loud, but these investments sting. For years, China's been the big spender in Asia, pouring money into ports, highways, and digital networks through its Belt and Road Initiative. But guess what? That checkbook diplomacy is starting to bounce. China's growth is slowing down, 4.8% this year, dropping to 4.5% next. Meanwhile, the Philippines' economy projected to hit 6.2% growth next year. The underdog is catching up, and the heavyweights losing stamina. Now, with Japan and the US stepping in, China's economic monopoly in Southeast Asia is officially over. Manila's not begging for investment anymore. It's choosing its partners. And it's choosing the ones who come with 5G, not fine print. But here's where things get spicy. Because money doesn't just build nations, it builds narratives. And the new Philippine narrative is all about power transformation. For decades, the country was labeled as potential, the economic version of almost famous. But with this $100 billion mega deal, it's stepping into the spotlight. We're talking about a nation that could hit a $1 trillion economy by 2033. That's not a typo. That's trajectory. And when that happens, the Philippines won't just be Southeast Asia's fastest grower. It'll be one of the world's top 20 economies. Think about it. By 2050, Manila could be mentioned in the same sentence as Tokyo, Seoul, and Sydney. Not as a neighbor, but as a peer. Still, before we start singing the national anthem with $1 trillion echo, there's one big question. Can the Philippines actually pull it off? Because growth isn't just about foreign money, it's about how you use it. Infrastructure only matters if it connects opportunities, not just cities. Energy investment only pays off if it powers innovation, not bureaucracy. And education reform? That's the secret ingredient no one's talking about yet. The Philippine Development Plan, 2023 to 2028, is trying to fix exactly that. It's a bold blueprint for digital transformation, PPP investments, and cross-sector innovation. Basically, a national attempt to go from developing to dominating. And with both the US and Japan pouring billions into education, tech, and health, not just construction. This partnership looks less like aid and more like a launchpad. But here's the plot twist. This isn't just an economic story anymore. It's a security story. Because the more money flows in, the more the Philippines becomes part of something much bigger, the new Pacific Defense Triangle. Let's be real, when the US and Japan invest $100 billion, it's not just because they believe in your economic dreams. It's because you've become strategically priceless. The Philippines now sits at the heart of what military analysts are calling the Pacific Defense Triangle, a security framework linking Japan, the Philippines, and the United States. This isn't coincidence, it's choreography. While China builds artificial islands, this trio is building alliances. And every dollar that flows in doubles as a diplomatic handshake. And let's be honest, a quiet deterrent. Because when you've got American tech, Japanese infrastructure, and Filipino resilience in one package, that's not just soft power, that's smart power. The US isn't just investing in factories, it's securing footholds. Japan isn't just building subways, it's laying the tracks for regional stability. And the Philippines? It's becoming the indispensable partner everyone needs, but no one can afford to ignore. And if you zoom out, this all ties to a bigger global pattern. The US wants to make sure supply chains are no longer held hostage by political tension. Japan wants to protect its energy routes and ensure the Indo-Pacific stays open and secure. And the Philippines? It wants to finally break free from the third world narrative and become the gateway of Southeast Asia. Think about it. The country's geography is no longer a vulnerability. It's a superpower. Sitting right between the South China Sea and the Pacific Ocean, it's like the region's natural toll booth for trade, data, and defense. Whoever has strong ties with Manila basically gets a front-row seat to the entire Indo-Pacific theater. And here's the kicker. The economic benefits are massive. By 2030, the Philippines' GDP could double to $800 billion. By 2033, it could cross the trillion mark. Private consumption's booming, the middle class is expanding, and foreign investors are lining up like it's the grand opening of Philippines 2.0. But here's where the momentum really snowballs. Infrastructure, education, energy, digitalization. All of it feeds into something bigger, self-reliance. Because the end goal isn't just to depend on foreign investment, it's to transform that investment into independence. And this is what most people miss. This $100 billion influx isn't about dependency. It's about leverage. It's about rewriting the country's narrative from reliant to relevant, from risky bet to regional boss. The government's now rolling out reforms faster than a TikTok trend. Streamlining permits, digitalizing transactions, boosting connectivity, and building PPPs that actually deliver results. The goal? to make the Philippines not just attractive to investors, but irresistible. By 2050, if growth holds steady, the country could become the world's 18th largest economy, ahead of Italy, Brazil, and even Russia. Not bad for a nation that used to be the sleeping tiger of Asia. The tiger's not sleeping anymore. It's stretching, roaring, and about to take a massive bite out of the global economy. And here's the most poetic part. This transformation isn't just economic, it's generational. Every new job, every new bridge, every new mega project lights up a path for millions of Filipinos who no longer have to leave home to find a future. It's the beginning of a new chapter, one where the Philippines isn't waiting for opportunity to arrive. It's building it, lane by lane, port by port, bite by bite. So, as Washington and Tokyo wire that $100 billion, remember this: it's not just an investment in steel, silicon, or oil. It's an investment in sovereignty. And in this new Pacific era, the question isn't whether the Philippines can rise. It's who's smart enough to rise with it. If you're still watching, smash that like button like it's a global trade deal and drop your thoughts below. Because the next decade isn't just about watching Asia grow. It's about deciding where you stand when it does.